Well, good morning. Welcome to Market Day Report. I'm Scott Shelty, otherwise known as the Cow Guy, and I'm here with you all day today. You got me for 5 hours, so settle in, get comfortable, get a cup of coffee. But what we're going to do today is we're going to talk about it's Columbus Day. We're going to talk about your markets and your money, and let's not waste any more time. Let's jump right in and see what we've got going on in that corn table. How about corn? Overnight, corn was sharply unchanged in that December contract, 530 and a half. We've also got March up a half cent at 540 even. So not a lot happening overnight in corn. Let's just see if that continues through into the soybeans. How about those beanies? All right, they're up 1 1/4 cents in November at 12.44 1/4, while Jan's up 1 1/4 cents at 12.55 and a half. We'll see what we get when we open up today, but it'll probably be a quieter session after we hear that 8:30 Central Time bell. How about Chicago wheat? What did that do? It was also a little bit better here. December was up 3 3/4 cents at 7.37 3/4. Well, March was up 3 1/2 at 7.50 3/4. All right. What about wheat in Kansas City, the hard red? Much the same, up 2 cents in Dece at 7.39 and a half, 1 3/4 cents in March at 7.47 and a half. So we'll see. How about spring wheat in Minneapolis? That was lagging a little bit, but it's okay, I suppose. Eking out a gain here going into the open. That's hard to say, but that's the truth. Up a penny in Dece at 9.47 and a half, while March is up 2 1/4 cents at 9.38. And then lastly, let's take a quick gander at cotton. Those are negative numbers for last week. December off 171 at 108.89. All right, let's bring in Brian Hoops from Midwest Market Solutions. He's going to sort it all out for us. What are your expectations? Okay, this is a weird one, I think, really. Today's a holiday for some folks, not everybody, for some. And then tomorrow we have a USDA report. So it might be an interesting session here, trading a holiday before a report. What do you think?
Yeah, it's a banking holiday. Markets are going to be at normal hours, but as far as no government numbers coming out today. No banks are open today, so margin calls don't age, that sort of thing. So you don't have a lot of that type of a trade, margin call type selling or anything. We're just kind of looking at what are we looking at for tomorrow's report. We know corn harvest probably 40 to 45% done. Soybean harvest probably in that 45 to 50% range. And with the forecast turning wetter this week, looks like we could slow that harvest pace. Then tomorrow we have the supply and demand numbers. The estimates are looking for slightly smaller corn crop and a little bit larger soybean crop, but ending stocks could increase for both corn and for soybeans in tomorrow's report while being reduced for wheat. So I think you're looking at really choppy type trade in the corn market. Soybeans probably going to stay somewhat under pressured, as we saw Friday, a big drop, as we didn't really have any type of positive news or fundamentals. And then you have the wheat market that I think wants to trade higher with looking at ending stocks being bullish for tomorrow. And you also have spillover support coming out of the oat pit, which was sharply higher again overnight.
What do you think about this? We're getting to a point now, we're expecting maybe some bearish numbers for tomorrow. But at some point in time, it doesn't really it doesn't pay to be too bearish corn at $5 or beans at $12, right? I mean, right. We might come back. We might get the numbers we expect to get tomorrow. Generally speaking, I think that the trade thinks that could be the risk, as we do get some more bearish numbers. But they have to be bearish enough that it brings in more selling. You know what I mean? And so that's that psychological trade that happens down there. So we'll have to wait and see. But if we do get bearish numbers and they're not bearish enough, you could see the market rally. Would you agree?
Absolutely, because everybody is looking for that harvest low at this time of year. So, your farmer that we talk with day in and day out, they're not going to be selling tomorrow. If it's a bearish report, they're likely to be holding out for higher prices longer term. The funds probably aren't going to be selling for the reasons you mentioned, to get real bearish right below or right around $5 December corn. It probably won't pay off this year. And there's probably going to end up being more buyers if there's a bearish report and we see prices down fairly sharply that are come in and try and pick a bottom in this market, thinking that the harvest lows are being scored now that we're getting close to that 50% harvested mark for both corn and soybeans. Seasonals tell us this is the time of year where we post a harvest low. So there's a lot of people, especially end users, I think, that are looking at one more drop or sharp drop in prices as that last buying opportunity.
Yeah, I think I would agree with you. So that's dangerous if I agree with each other. All right, don't go away. Stay right there. We're going to go away, pay some bills. We're going to come back. We'll talk with Brian Hoops after these messages. All right, welcome back to Market Day Report. I'm Scott Shelty. Happy to be here on a crisp Monday morning, October the 11th. It's going to be a Columbus Day. Thanks for joining Market Day Report. Let's talk about livestock for a second here. We'll show you the closing numbers going home on Friday, and then we'll talk to Brian Hoops about what he thinks the opening is going to be. But we had we had a mixed board. You could tell by these changes it was quiet on Friday, right? 30 cents higher in Oct at 125.57 for the live cattle, and Deese was up 15 cents at 130.25. How about feeders? They were, I think, much the same. A little easier though, but still quiet. November down 45 cents at 161.15. January down 12 cents at 161.12. And then lastly, we've got lean hogs. How did they go home? Take a look at this. December off 52 cents at 81.50. So again, pretty quiet. Let's bring back in Brian Hoops. Brian, anything to say in the livestock market? What are your thoughts here? Or if you've got another axe to grind elsewhere, the floor is yours.
Well, you look at the cattle market a week ago at this time. We came into the week, October futures in the 120 range with cash 123, 124. We were certainly no threat of deliveries and likely that we're going to rally that futures market up to meet with the cash. And we did that last week. In fact, now we're over the cash markets. We saw cash 123 to 124. Futures are over 125. That means we could see some deliveries, and that's going to take some of the steam out of this market rally that we saw last week. So I think we follow what the cash market does, but if we don't see anything better than 123 this week, you're going to see some deliveries against that October futures contract this week.
That is excellent stuff, and I really appreciate it. And we didn't get to another subject I wanted to talk about, which was going to be inflation and what that might be doing to these prices in our markets. But thank you very much. Good to see you. We haven't spoken in a while. That's Brian Hoops from Midwest Market Solutions. Thanks for joining us today, and I'm going to hand this one back over to Tammy.